This is Josh Jelinski, the financial quarterback. Don't touch that dial. Hi, everybody. This is Josh Jelinski, the financial quarterback. And we're being joined by Steve Hanke, professor of applied economics and founder and co-director of the Institute for Applied Economics, Global Health, and the Study of Business Enterprise at Johns Hopkins University in Baltimore. Glad to have you back, Steve.
Good to be with you, Josh. As an old quarterback, I'm delighted to be on.
Great. Thank you. Where'd you play for?
I played for the great Atlantic, Iowa high school team, one of the best teams in the state in 1960. That was a while ago.
Did you have fun?
We only lost one game, 14-13, and but you know we were up there on the top of the charts. Then a few years later, by the way, the quarterback who replaced me was a guy named Eddie Podolak, who was a big Kansas City Chiefs star.
Did you play in college or you were done after high school?
I was too worried about flunking out, and I had to spend my time studying. I hung up the quarterback thing.
That's great. Where do you go to college?
University of Colorado.
Oh, great. Yeah, I saw in your bio you taught at the Colorado School of Mines. What did you do for them?
I just was starting my second year of graduate school, and the Colorado School of Mines called the chairman of the department, and he said, we have a big problem. It was 2 weeks before classes were to start, and the professor of economics had dropped over dead of a fatal heart attack, and they were desperate. So I was the guy they fingered, and I became an assistant professor at the Colorado School of Mines at a pretty young age. And the first year taught all principles of economics. And then I did some innovative things. I taught the first course in petroleum economics that was ever taught at mines, and the first course in mineral economics. So it was a great gig, and then of course finished my PhD work and moved on to Johns Hopkins, where I've been for 55 years.
Where'd you get your PhD from?
Colorado.
I saw in your bio you were at UC Berkeley, University of California, Berkeley. How long were you there?
That was 1 year. I went out to Berkeley, preferred Hopkins, so I came back to Hopkins.
You've been in Hopkins for over 50 years. That's quite an achievement.
55.
Wow.
In my 55th.
How do they handle you at academia? It doesn't really matter because economics departments are generally a little more conservative.
It's never really bothered me. Let's put it that way. I just do. I do my own thing, and I'm very independent. Shall we say that the campus politics or wider politics? It doesn't bother me.
So you have your own institute at Johns Hopkins. How do you get that? That's pretty cool.
Formed this in 1995 with one of my good friends and colleagues, Professor Lou Galambos, professor of business history, and we decided that it would be a good idea to have an institute because both of us were heavy into research, and we thought the institute would really facilitate that, and so we went to the provost and said, we have an idea, and he said, oh, that sounds pretty good, and we just did it.
Now, you're a well-known currency and commodity trader. How did you get into that? I mean, obviously you were in mining, and I'm assuming that's the connection, but
I've been involved in trading for over 70 years. I started with my grandfather when I was about 10 years of age, and my grandfather had a big egg candling operation in Iowa, and in those days they'd gather the eggs and bring them in, clean them and grade them and sort them and so forth, and then put them in storage until they had a semi-load of eggs to go back to the East Coast, usually New York, sometimes Boston. But in the duration of time that the eggs were in the warehouse, of course, the egg prices could go up and down, up and down, and up and down. So you had price risk involved. And if my grandfather didn't feel like taking the price risk, in those days, there was a futures contract on the Chicago Mercantile Exchange for eggs. So what you would do, if you didn't want to take the price risk, you'd sell the eggs forward on the futures market. And I was, shall we say, helping Grandpa do that. It was pretty basic, and I understood what was going on. And in that farm country, you learn how a farm works and how revenues come in and cost and expenditures go out. And the pluses have to be in front of the minuses, or you're out of there, because you can't pay off the mortgage on the farm if you've got one. So at any rate, I learned that egg business, and then a few years later, I was about 14. I opened my first trading account and started trading. I remember soybeans were big then. Those were the first trades that I was putting on were all in soybeans. So that would be about 68 years ago. And then there was a little lapse, and in 1985, I met Dr. Albert Friedberg in Toronto. He'd read a column that I'd written in Barron's, actually, invited me up to have lunch with him in Toronto, and we hit it off and saw eye to eye. His orientation in economics was Austrian school economics, shall we say, free market economics, and that was mine. And I had the commodity background and so forth. And so I started there as a chief economist, ended up as a chairman, and I'm the chairman emeritus now. And throughout that time, we had some quite big trades. The first trade I was involved in, I had modeled OPEC, the oil cartel, 1985 when I started, and analyzed the thing and concluded that OPEC was going to collapse and that the price of oil would go down to below $10 a barrel. And so we had very big short positions on oil, gas contracts, the Saudi rial, Kuwait dinar, two currencies. And in fact, OPEC did collapse, and the oil price did briefly go below $10 a barrel. So the positions we had, Josh, to give you some idea, we had over 70% of all the short interest in the London market.
Wow.
We had massive positions on. And so that was the first big trade. And then there have been others. One episode that was quite exciting for me, I was the president of Toronto Trust Argentina in Buenos Aires, and we were the best performing fund in the world in 1995, actually. So there are all kinds of war stories, but it's been an exciting life, and dovetails in with research that I do in economics and finance and markets. So I'm an academic that's actually connected to the real world.
That's rare, but it's probably refreshing.
Yeah, now it's completely unusual. I mean, the academics now are just completely removed from anything in the real world for the most part.
Are you still trading?
Yes.
What's your biggest trade right now?
The thing I focus on a lot is gold, because 4 years ago, you mentioned the University of California at Berkeley, and I was out there in the mid 1970s, and one of the students I had is a fellow named Abe Kaufness, who I'd stayed in contact with over the years. Abe is an experienced trader. We had a common interest in the markets, and he's written a number of books, and most of them published by Bloomberg. And one of these books he'd written was on sentiment, market sentiment, measuring sentiment. And we tossed that idea around, and about 4 years ago, we decided, now with computing capabilities that we have, you can text mine. You can read a text, and if you have a dictionary of words, you can figure out whether the text is bullish or bearish. And so what we decided we'd do is we came up with something called the Hanke Kaufness Gold Sentiment Score. So every hour we take every article on gold that's published on the web and we text mine it, and we figure out if that articles are bearish that hour or bullish, and we come up with a score. And what we found over the last 4 years we've been doing this is that if you have extreme values of a very bearish reading, for example, most people would think, oh, you should be selling short. Be a bear, be a bear. No, if you get an extreme reading in the sentiment score, it tends to revert back towards neutrality or bullishness. And so you want to be a contrarian. If the score is extremely bearish, you've had a short position on, you want to liquidate the short position, or if you have no position, you want to put on a long position because the sentiment is going to go back bullish and the market will start rallying and from bottoming out in the extreme bearish position it was in. So you can see what we're doing if you go to gold sentimentreport.com. You can see what we're up to. So I'm doing a lot of work and research with Abe Kaufness on that. Of course, I'm very bullish on gold. I have been for quite some time. That's based on fundamentals. The fundamentals on gold are bullish, and gold is in a bull market. I mean, this week we made new all-time highs in gold, actually. But with the gold sentiment indicator, the Hanke Kaufness gold sentiment indicator, you don't have to be bullish or bearish because you can be trading on a very high frequency basis. You can be in and out of the market 2 or 3 times in one day, going in different directions. In other words, let's go through a hypothetical, Josh. The hypothetical would be, let's assume there's no bull market, there's no bear market. The market is just static and neutral, and the price at the start of the year and at the end of the year, the price is exactly the same. Well, the one thing we have is volatility. So even if the price trend is horizontal, flat, not moving, there'll be volatility. The price will be going up, down, up, down. And the Hanke Kaufness Gold Sentiment Score will allow you to trade, and by the way, trade quite profitably, just trading volatility, price price volatility, that is. So so that's one thing that I'm focused on.
I mean, ideally, are people buying like GLD or IAU or something like that, and then there's a short ETF, or are they doing something else?
Yeah, you can do that. Well, you could trade it any way you want, in any way you want to trade it. So you could do as you mentioned, or you could just go to the futures market and trade futures.
Do you have any other cool ideas like that? That's interesting.
The other thing right now, I think the equity market in general, I'm not talking about any particular stocks, is in a more or less a bubble phase. It's overbought, overpriced, and overhyped. So I'd be quite cautious about being in the market. This year, I would say, is going to be a year of investing dangerously. And the reason for that is that the big market, which is New York, by the way, I mean, it's the monster. It takes up, about 70% of the global stock index. About 70% of it's all in New York. So if I think that's a bubble and I'm cautious, are there any other alternatives that are, maybe more prudent? As as Warren Buffett has done, I'm fairly heavily in cash.
Our tactical program, I think I don't know, we're a sizable amount in cash right now. So been at for a month, 2 months, something like that.
Even if you're all in and heavy, you should be paying attention to what's going on in the market, because I have something I call a bubble detector, and Hanke's bubble detector actually is in the bubble right now. And if you look at other things like Professor Schiller at Yale, he has a way of looking at PE ratios, and those are very elevated. I don't know whether they're at an all-time high now, because I haven't looked at Schiller's numbers for a month or so, but they're they're very high. So the PEs are very high. Hankey's bubble detector is in the bubble zone, and so kind of hang on to your hat. Make certain you got your safety belt on.
The Hanke bubble detector, where can somebody look that up? I'm Googling it right now.
So I wrote one of my Forbes columns quite some time ago, and I think it's called Dr. X's bubble detector.
Yeah, I saw that.
What's the date of the Forbes thing? Because people can go and just read
2017.
Yeah, 2017. It's been out there for a while.
But that's my point, though. That would be my counter. I've heard of the Buffett indicator, the hamburger indicator, all these types of things, the P Schiller. The market's been overvalued for a long time, probably since 2017.
I would tend to be cautious, because there's one thing to be in a bubble, and as you say, well, you could be in a bubble for a long time, and the darn thing never pops on you, and so you don't want to be on the sidelines necessarily, but maybe you would want to lighten up a little bit and become a little bit more weighted in cash, and also you have to think about it this way. Is there anything in the market you actually would want to be buying at this stage? It's one thing to be in a buy and hold situation. If you are in a bubble or think you're in a bubble, it's another thing to be going into the market, buying and adding to your position, and that I'd be ultra cautious about.
Do you have anything where it's published like year by year? I'm just curious how it did from like 2017 to today.
It's done pretty well. I think what you're suggesting is maybe I'll write one of my National Review columns and update it and put
I would like to see that. Here's why. Sometimes I get some of my best advice. Not that we're not giving investment advice. I would say tips, theories. But what I do is because I interview the greats like you, and we could tell you're a legend just by opening your mouth. And we've had you on before, I think once before. But there's things that I glean, right? So you'll get maybe somebody of lesser intellectual firepower say something like the Buffett indicator. But the greats like you and Ranson, it's something they must have done with somebody who, I don't know, how old are you, if you don't mind me asking?
82.
82 meant you really did the math and you did the ratios back. The people who go to school for PhD in economics, they don't even know math anymore. You were actually doing the real calculation. So Ranson has this gold indicator that I don't ever know what the heck he's talking about, but it's the ratio. I do, but I'm having a little fun here. But it's the ratio of the gold price into the 30-year strips. And
Right.
when everybody else was predicting deflation, he was predicting inflation. I mean, we had Lacey Hunt on, and Hunt is very convincing and great at popularizing data. And I remember I had a roundtable where we had, 1,000 people in, and people were laughing at Ranson. They weren't really respecting him, but he called it right on. And I find that, when I look at the bottom, the bubble detector index is the S&P over the personal income per capita divided by the one over the 10-year constant maturity rate. You guys come up with stuff like that, and there's gold in that. Because you look at things a little bit differently than people look at things today. I don't know how to describe it, but I get stuff that's actually tradable ideas. So when I had Ranson on when gold was like 1,500, we took a big gold position. And so I get ideas, not that you're giving me advice, but I glean things from the greats like you guys. That's all.
Well, you always have to listen to what people are saying, or what if you're not listening to them, watch what they're doing. So you did mention gold. As far as gold, the line I love on that is buy gold, wear diamonds. Another thing that it is interesting. Uh, I said a little heavy on cash. Well, cash. You usually people think of cash as something, a bond, for example, a T-bill, something with very short duration. But I still like as a trade anyway, the 10-year right now, because I'm a devotee of the quantity theory of money. And the quantity theory of money, I think, is the most reliable way to determine the course of the economy. It is a model for national income determination. Now what's that mean? That means if you know the change in the quantity of money, you're able, with the quantity theory of money, to predict what's going to happen to nominal GDP. And nominal GDP has two components. One is the real rate of growth, whatever that percentage is, and the inflation rate. If you add those two together, you get the percentage change in nominal GDP. So that's knowing quite a bit. Yeah, that's suggesting now that the economy will slow down, and that inflation, everybody's got all excited, this week, the inflation rate went up by a tenth of a percent. It went
It's like the price of eggs or something. It's nothing.
2.9 to 3%. It didn't surprise me because there's kind of a January effect. It was a January number, and the January number always pops up a little bit, but it's kind of a seasonal thing. But the big picture is, since the summer of 2022, Josh, the money supply, the stock of money, is actually lower now, a little bit lower than it was back in the summer of 2022. And that kind of contraction has only happened 4 times historically in the United States. And when the money supply contracts, like those 4 times, what happened? We had a recession. And one of the 4 times, by the way, there was a big contraction of 38% from 1929 to 33, and we have the Great Depression. So we have the money supply is contracting since the summer of 2022.
Where can I see this? Where can somebody Google?
Go to St. Louis Federal Reserve, Fred, and go to the M2. That's the broad measure of the money that the Fed, and you'll see that it has contracted. That means I think the economy will slow down this year, and I think inflation will keep coming down. It's been coming down. It's actually been kind of plateaued the last 4 or 5 months, but I think it will head down, and we'll see some inflation numbers come in at 2%, the inflation target of the Fed, or below in this year. And if that's the case, the yield on the 10-year will come down, and of course the price goes up if the yield comes down, and you make a good capital gain on that trade, and in the meantime you'll be picking off pretty decent interest. For me, that's almost a no-brainer.
What if Elon and Trump are successful? I want to get your take on DOGE, but I've heard stories of people work for the government. Remember one guy who worked for the prisons, and he said he had to destroy. We know the guy, and we're not going to say the guy's name. Every year, worked for the prison, he had to destroy the Suburbans. Those 60, they were 60,000, now they're 100,000 Suburbans. They'd destroy them every year, or else they wouldn't get money, because the way the budgets work. So for years, we've heard waste, fraud, and abuse is only just a pittance, right? I think what Elon's getting at, I wanted to get your take on this, it's not just about someone willingly committing waste, fraud, and abuse, but just it's systemic to the whole idea of a federal budget process and the way appropriations work, that if that prison said, no, we'll keep the Suburban, we can keep the Suburban for 5 years, they're not going to get as much money in the next round. of appropriations. So they have to keep doing these strange things that they're uncovering. So I think it's going to be endemic to the whole system. They're going to find a whole lot more money than they ever thought possible. What do you think?
Economics, Josh, is all about incentives. So you have to let's talk about the private sector. What's the incentive structure in the private sector? You're in the profit and loss system. You've got a business, and if you don't bring in more money than you're expending, you're running a loss. And everybody knows that because you're audited and you have accounts either coming in on an annual basis or a quarterly basis. So ex post facto, you know whether what you are trying to do, whether it's working or not. And if it's working, you make a profit. If it's not working, you make a loss. And if you make too many losses, you're going to be bankrupt and out of the game completely. Now, the public sector, let's jump to the public sector. You were talking about the guy at the prison. Their incentives are not in accord with the profit and loss system because no one comes after the fact and looks at the plan and operation to say, oh, were the benefits greater than the cost? No one ever looks at that. So the incentives simply aren't there. It's a different world. And that's why businessmen, by the way, have so much trouble when they go to try to fix something in the public sector because they think the public sector is just like a business. Well, it isn't just like a business. Everything is completely different. So I wish Musk and DOGE a lot of luck, but I will remind them that we had the Grace Commission when I was on Ronald Reagan's Council of Economic Advisors in the early 1980s. Peter Grace was head of the Grace Commission. He did a terrific job of surveying all of the government and came up with 2,500 recommendations about how to cut the waste, fraud, and abuse, which was blatant. Everyone knew it was there. But very few of those 2,500 recommendations ever were implemented because once the implementation starts, you have special interest and you have a Congress that pushes back. Now let me give you just one example. I was Reagan's privatization guru. Now, what's that mean? That means I was the guy that designed Reagan's privatization program that would have taken the balance sheet of the federal government and shrunk it. We would have sold assets that were owned by the federal government and used that revenue to go over to the liability side of the balance sheet and what? Reduce the federal debt. But one thing, let me just give one example. You want to close a surplus Army base or Air Force base or naval station. And that base will be located in a state where there are 2 U.S. senators and at least one U.S. congressman or congresswoman will be involved in the thing. And they'll fight tooth and nail not to have it shut down. So you're stuck. So that's what's going on. Now, I think Musk, as I say, he's onto something here. And I think he spotted some of these ridiculous things going on. For example, USAID, which is a bad idea. It should have been shut down a long time ago.
Do you know how horrible that is? I did some research into it.
What'd you find?
I think the evil of that USAID is far beyond what we even realize. People talk about the 8 million of Politico. They gave 2 million or something like that to Christianity Today. They gave money to World Vision. I love World Vision. I had a child, we support, I love some of these groups, Catholic Charities. They give to good groups. But what I noticed with Christianity Today, because I've been a reader of Christianity Today for years, I don't know if you read it, was that they would soften Russell Moore, who was on the Southern Baptists, all of a sudden started being a little bit more left of center. This guy was a conservative for 30, 40 years. If you got $2 million handed to you from the government, are you going to really speak ill of various policies? And I didn't like that they were influencing media. Politico, I get, they're a little left, but the Christianity Today one was crazy. And then when you follow the money, they gave $2 million to Christianity Today. Then they gave Christianity Today gave $300,000 to a woman named Julie Roys. The USA didn't give money to Julie Roys, but then Julie Roys would write hit pieces on people who were critical of the lockdowns and things like that, the COVID lockdowns that you heard. It's so crazy stuff that I don't know if you're following me, but as a reader of Christianity Today for a number of years, it was striking how it went from a kind of a centrist, center-right kind of magazine to one very critical of Trump and kind of neutered on Biden, Obama. And I wondered, did the gift of funds have anything to do with softening their stances a little bit? And it might have not even been intentional. It might have been, and that was something they did in communist Romania, where they gave money to the Orthodox priest, and they kind of let them do their thing as long as they didn't critique the government. Very scary stuff with USAID.
The key thing, if you read earlier this week, the U.S. senator, one of the U.S. senators from Iowa, my home state, by the way, when I was talking about the egg operation, it was in Iowa. So I'm a country boy from Iowa. So one of the U.S. senators from Iowa, Joni Ernst, wrote an op-ed in the Wall Street Journal earlier this week, and you find out about USAID. She couldn't even get in to see their books. They keep everything secret. And she was trying to figure out what they were doing. And it's an amazing story. You got a U.S. senator who's requesting information, and they're not able to get it. I mean, it's like it's top secret. So that article is very revealing because it gets into what I was talking about earlier, and that is there's no one who goes in after the game to see what actually went on during the game. In a private business, after the game, after the end of the year, the accountants go in and you know whether you made a profit or made a loss. This does not happen in the public sector. So everything going on in the public sector is very opaque, to put it mildly, if not de facto top secret. I mean, there are thousands of things that are stamped with, top secret on them. Those are de jure top secret. I'm talking about de facto. De facto, virtually the whole thing is top secret. The Defense Department, they've never been able, the biggest single expenditure we have in the budget of the federal government, they've never been able to audit the Defense Department. They can't do it. I mean, the auditors go in and they say, we just can't do it. It's not feasible. Other departments are audited on a regular basis, but the big elephant in the room is the Defense Department, and they can't audit it.
Yeah, 28 minutes ago, they just said $1.9 billion of HUD money was just recovered after being misplaced during the Biden administration due to a broken process. These funds were earmarked for the administration of financial services, but were no longer needed. It's crazy.
Obviously, the Democrats, they're in the minority now, but they've come in to defend, all guns blazing against Musk and DOGE. Now, what are they doing? They're actually protecting the civil servants and bureaucrats, protecting them from the taxpayers. The taxpayers put the money in. They want to know what's going on. And Musk is saying, oh, I'll help you with the holy water sprinkled over him by President Trump. He's in there trying to root out these things and at this point, just identify them. but there's quite a bit of resistance to him, and you've got to think about it. Step back and think, what is the resistance? The resistance is defending the civil service from the eyes of the taxpayer who want to take a peek under the hood.
You know what's interesting? I read these every day on the Department of Government Efficiency feed. A majority of these things are not laying off federal workers or civil servants. Most of it appears to be how contracts are handled, how kind of the books are done. So it seems like, they are trying to force some employees to be laid off and consolidation. But a lot of these are just canceling contracts that seem to be just a waste of money.
People don't realize there are two aspects to the federal government, or any government for that matter. You have the regular civil servants, but you have a tremendous amount of contracting out that goes on, and that's what you're talking about. Now, one thing that Musk isn't doing that I think he should be doing, what is he doing? Well, he's focusing on, in effect, the flows, particularly the flows of money going out and the flows of money coming into a bureau or agency, and the money going out. So that's kind of like the income statement in a business. It's the flow. But the key thing, and the elephant in the room, is the stock. It's the balance sheet. There's nothing more important than the balance sheet. And what is the balance sheet of the federal government? He should be looking at that balance sheet, as I did, by the way, and trying to figure out what to sell, what assets should be sold, and how to shrink that balance sheet. And the sale of those assets will generate revenue, number one. And number two, you will be able to pay down the debt.
I think that's brilliant. And you'll also lower inflation simultaneously. Think about how many federal lands they own that, if sold to real estate developers, that might get Trump in a little bit of trouble. But what do? We have a housing shortage in this country. Where I live in New Jersey, I just came back from Hawaii. There's a housing crisis. And then you see all this land and you realize, oh, it's a federal land, and it was probably done for good reasons, maybe the environment. But we have a massive housing shortage, which is really contributing to people feeling poorer and inflation. So do you think that's a good idea? Get rid of some of these federal lands?
I designed the whole program to do this, and you have about 160 million acres of grazing land, commercial grazing land, that's owned by the federal government, and about 80 million acres of commercial timberland. We wanted to sell that. And what happened? We ran into a buzzsaw of particularly the environmentalists. In those days, it was the environmentalists, and they didn't want this sold. They kept saying, "Well, you're gonna pave over all these areas and have a big parking lot, in the state of Nevada or something." But the reality is that the environmental quality on private timberland and private grazing land is much, much better than those lands that are owned and managed by the federal government. The quality of those lands is very poor. And it's easy to see this visually if you fly over and take a picture where you have a border, grazing land, private on one side and public on the other. The private will be in good shape.
Public looks all ratty, and yeah.
By the way, why do you have so many forest fires in the United States on the U.S. Forest Service land? Because they don't harvest the trees. They get old, they get rotten, they get diseased. You have blowdown. You've got all kinds of trash on the floor of the forest, and it's combustible. Lightning hits and boom, you got a big forest fire underway. This does not happen with that kind of frequency on private lands because they're harvested and cleaned out, kept in good shape. If they're not kept in good shape, by the way, in the profit and loss system, you end up not making a profit, making a loss, and going bust. So you got to take care of things.
Is your most recent book still Did lockdowns work?
That one was in 2023, the end of the year. And the conclusion of that book was that the COVID lockdowns had virtually no effect on mortality. That's saving lives. It saved very few lives. And we know the economic cost of the lockdowns was just massive. So it was a very bad, probably the most disastrous public policy decision since World War II.
Wow. But that's what's crazy about that. Both parties were for it. At the time, there was one guy, I remember. What was that guy? Congressman Massey from Kentucky.
Massey got the thing right, but
And he was the only guy who tried to stand up against the lockdowns. And Trump shamed him. And
he's an MIT graduate. He's got a little gray matter between his ears.
It was interesting when it first came out. I remember all these scientists saying, "Oh, there's nothing you can do to stop this." And did you see there was talk about Sweden? What was the country that they said didn't do the lockdowns?
Sweden didn't do the lockdowns. One of my co-authors is Lars Jonig. We did that book with Jonas Herby, and Lars Jonig is a Swede. So we looked into the Swede thing in quite some detail and found out two things were going on. One, lockdowns in Sweden would have been unconstitutional. Their constitution, which was written in the 16th century, prohibits the government from interfering with the Swedes' movement. And they specifically have in the Constitution the liberty. They say the liberty of Swedes to move freely is guaranteed by the Constitution. So they couldn't have locked down, and they didn't lock down. And then the director of the Public Health Service also, as an epidemiologist who had a very well formulated idea that this herd immunity would kick in and it's best not to lock down. So the two things went together, the legal part and his epidemiological training and conclusions. And as a result, after the fact, who's the best country in the world on the pandemic? Sweden, number one. They were getting hammered. Remember in the press, everybody was rounding on them all the time.
Yeah, because all these people were dying early. Yeah.
They didn't do everything perfectly, by the way. They did make some mistakes. They put a lot of people in homes for elderly people, and that was a mistake. They shouldn't have done that. But overall, their record was superior after the fact, looking at it.
What was superior? Like, how is that provable?
Well, you just look at mortality. You look at what happened.
So what percentage of Swedes died versus the U.S. or what?
You look at excessive deaths, what they call excessive deaths, and they were lower and lower in Sweden than any place else. They had a very good record. We found, by the way, that when I say the effect of lockdown saving lives in the United States is a very tiny number. Off the top of my head now, and I don't have the book right in front of me with all the numbers and tables. The number is much smaller than the number of people who normally die of flu in a flu season in the United States. That's how small the number was. A small percentage of the people who actually every year just die from flu. So the lockdowns had almost no effect. And we started, by the way, we looked at over 20,000 studies of this. So it was called a meta-analysis. So you start with all the studies that have been done and then narrow it down and pick out the ones that actually can be compared on a high quality basis with one another. And out of the 22,000, we ended up with, there were only 22 high quality studies that we could actually glean reliable data from and do our study. Now, what happened with the study was very interesting because there were a lot of people tried to censor that. We were subject to tremendous amount of flack and censorship. The U.S. government involved in it. You also had like Facebook and everybody was on board following orders from Washington, D.C. to deep six this study. And the reason why it was coming from Johns Hopkins University, number one, and you do anything with health from Johns Hopkins and you've got credibility. So they were very worried that this finding would be very credible by a senior professor at Johns Hopkins University. And we just faced censorship. We ultimately wrote the book. And by the way, a couple months ago, we had the last installment of our research was published in the Journal of Public Choice. And you can find, that updated. So 2023 was the book. It was a peer-reviewed book published by the Institute for Economic Affairs in London. And then subsequently, a very prestigious journal, Public Choice, just a few months ago, published the last installment or our most recent installment of that work. But it all says the same thing. Lockdowns were a complete disaster, not only from a public health point of view, but from an economic point of view.
At first glance, I would say, well, they could have been a success because they lessened the medical community was not able to handle all the influx of people into the hospitals initially.
That isn't true either. If you look at what was happening, the hospitals had tremendous amount of excess capacity. This was a big lot.
Yeah, but I had COVID in 2020 or 2021. I nearly, died, but the that thing that they said that the Biden administration stopped, the monoclonal antibodies, they saved my life. But it wasn't that they didn't have space. They had space in a lot of wards in the hospital. They brought everybody to the ER. This is one mistake. So you're coughing. So I had COVID, fairly young man, and I recovered very quickly because the antibodies, but they didn't make me wait. I said, I don't want to get anybody sick in the ER. They go, you have to be in the ER. And I'm hacking up on all these people with the viral load. So if there's an elderly person there who wasn't there for COVID because they were isolated, they came in for something else. Now she's getting exposed to me. It was a mess, but it was a lot of people in the emergency rooms all on top of each other. And then I said, well, why can't I go into a private room? They said, oh, no, I know what you're saying. Like it was amazing. There was a whole wing of the hospital that had no people.
One of the costs of the way it was managed in the United States is that they were spinning this story that the hospitals were overbooked, overfilled, and they weren't letting anyone into the hospital for hip replacements and
exactly, yeah,
putting a stent in your heart and all of that kind of stuff, and there were a lot of casualties because people were not allowed to go to the hospital and be treated for non-COVID things.
Oh yeah, I have friends who got like colorectal cancer and stuff, and colon cancers that would have been very easily treated. But it's interesting. You're making me think, of when I was there, it was unique. There were so many people in the ER. They were like, I was on top of people, which that was kind of dumb. And then there were wings, because I had friends who were nurses, where they had nobody, where they should have at least like spread us out.
The big story that really never came out is that there was a tremendous amount of excess capacity available in the hospitals during COVID.
Yeah. But they should have. It was amazing how I went in, and as soon as I saw there were people there for some reasons other than COVID, I was like, can I go in my car and you knock when I'm, when you're ready to see me? And they said no. And then they had me lay in the ER. I felt like I was going to die. I didn't even have a bed. I had this like gurney thing and I was on top. I actually signed myself out of the hospital because I'm like, if I'm going to die in here, I'd rather die at my house. And then they called me the next day and said, okay, we can see you for the antibodies. So then I drove back. I almost got in a car accident because I was so delirious driving back, but I couldn't breathe. And it was a very scary occurrence. It was, I think it was the second wave. So I want to say it was the summer of 2020. And it was either 2020 or 2021. No, it was the summer of 21 because we just had my last baby.
It was the second wave. It was 21.
It was the summer of 21, the Delta variant or whatever that, or the Beta variant. And
Fortunately, Mrs. Hanke and I avoided the whole thing.
how'd you avoid it? You didn't get it once? I got it like 2 or 3 times.
This is why all the epidemiological models are misspecified, because people change their behavior. This is why they did well in Sweden. People changed their behavior. They were given information about COVID, and they avoided excessive contact.
Oh, well, that's why I did. I just kind of continued. After a couple months of isolation, I'm like, forget this. I'm just going to live. So that might be why I got it 3 times.
The best example of this, if you go back and look at the Spanish flu hit initially in New York, and a lot of people got hit with it and died. And what happened? Well, with the telegraph, the message went out all across the United States, and as a result, people changed their behavior. By the time the news got to Chicago, they had a big problem in New York. People started adjusting. They changed their behavior.
So what did you and your wife do? Just isolate? You went to live in the country? Okay.
Our youngest daughter is a professor of medicine at Johns Hopkins, and she said, "You're not going to the grocery store. You're not doing anything," and we didn't. And our daughters did all the shopping for us and so forth. And why? It was an age problem. Yeah, it wasn't a problem with young people, but as our daughter said, Dad, at your age, you and Mom, you don't want to get this stuff.
The variant I had was like, the first one. The second and third time, the second time was like a very bad flu. I might have had it 4 times. The final 2 times were so mild, I didn't even, it was like a cold virus.
You got a good dose of the thing, Josh.
I may have had it this December. I was sick for a while this December. Was something fierce. Because I'm of a different, after a certain amount of time, I didn't let it affect my behavior. I was like, I'm going to live my life. But it's different. I mean, you're absolutely right. If we could have done behavior modification and lived in such a way that everybody stayed in home.
The reason these epidemiological models predicted that, we'd have a huge number of deaths, they always do, by the way, is that they don't have any behavioral variables in these models. So the models assume that no one changes their behavior. It's like what I call Hanke's hot stove effect. If you're in the kitchen with somebody and they tell you, careful, that stove is hot, are you going to touch it? No. You're not going to put your hand on it and touch it. The epidemiological model assumes you're going to touch it and burn your fingers.
Are epidemiologists talking to you about changing their models in the future, or not really?
Not really. They're worried about our research because the research blatantly shows that the models should be rubbished. And by the way, the gold standard for most of this is Imperial College in London. That's where all the big models about bird flu and you name it, everything under the sun, and they're always way, way, way off.
Now changing gears to another book you've written, Making Money Work, How to Rewrite the Rules of Our Financial System. You talk about fiat money a little bit.
That book, Wiley is going to publish that. My co-author is Matt Sakurki, one of my former students.
Oh, it's not been written yet.
It's coming out in April. You see this?
So we're getting a preview right here. This is great.
That's the galley proofs. I just had them printed out today.
Wonderful. Making money work, how to rewrite the rules of our financial system. So, folks, you've heard it here first. Can people pre-order it on Amazon?
Yeah, they can pre-order it on Amazon, and they'll be able to get it. It'll be released April 29th. So Kirky and I are doing is highlighting the fact that what produces most of the money in the United States is commercial banks and commercial bank lending, and due to regulations, the, they have been squeezed out over time, and we want to put banks back at the center of the economy. That's a very important part of the book, and to do that, we look into monetary policy. And monetary policy, and not only is what the Fed is doing, but one thing most people don't realize is what bank regulators do. And bank regulations affect very significantly how the money supply is changed one way or another, and also fiscal policy, what the government's collecting in taxes and spending, that has something to do with it too. So we have a much more holistic view of monetary policy than is traditionally the view. The traditional view is, oh, all you have to do is look at the Fed. The Fed is monetary policy. Well, it turns out, in fact, most of the money in the United States is actually produced by commercial banks. It's not produced by the Fed. About 75% or more of the money circulating in the U.S. economy, measured by that M2, that number that I told you earlier, is actually produced by commercial banks. So the regulations that affect the commercial banks are a very important determinant of how much money the commercial banks and how fast they're producing that money. So that's a second aspect of monetary policy, and a third aspect is fiscal policy, because the fiscal policy, for example, after the pandemic, what happened? We had a huge fiscal deficit erupt, and about 90% of that fiscal deficit was financed by the Fed monetizing it, the Fed buying the securities that were being issued by the Treasury to finance the deficit, the gap between revenues and expenditures of the federal government. So all those three things are put in an integrated package, and at the center again of everything is again the commercial bank.
I mean, there's a commercial banking crisis that people are not aware of. And I think what you're getting at, and maybe I'm just kind of telling you what's in my mind and you correct me. Part of the problem we have today is private equity, leveraged buyouts. I sound like Bernie Sanders, even though I'm more. But if you really understand Silicon Valley Bank and all of these tech companies, if you're a small business now and you have an idea, you don't go to a commercial bank. You try to, it's almost like a pump and dump scheme to get $100 million buyout from some private equity firm. And then your company's run into the ground. There's really no value creation. We're in the old system where I had a good idea. I go to my commercial bank. I owe them money. I pay them. And then I'm building a company. Do you get into that a little bit more?
We have a huge amount of in that, because there's a big difference between investment banking and commercial banking, because investment banks that don't create money.
Yeah, there's no value creation.
No, they take savings and funnel that savings into bankable projects. A commercial bank does not operate like that. A commercial bank makes a loan on a bankable project, and that bankable project, when they make that loan, they're putting money into somebody's checking account, and that checking account money is part of the money supply. They're creating money. That's fiat money. That's how it's created, and it's being loaned for a bankable project, and that bankable project will be collateral for the loan. So it's all connected to the real economy. The fiat money that's being created is, in fact, connected to the real economy with these bankable projects. So what we're talking about are things in the system now that have biased us away from banking, commercial banking, and more into shadow banking and
when I think of clients and how they got money for the business, they sold their business to some private equity firm. They didn't, and are commercial banks even lending anymore? I mean, I know when I go to my bank for a loan for my business, it's like, you're signing over your third child and there's a whole list of, it's almost like not even fun.
They're not lending as much as they used to proportionately. I mean, yeah, they're lending a lot of money, but relative to the size of the economy and the total system, they've been shrinking. And we think it's important to put banking back in the center of things because commercial banking is actually connected to the economy.
So I want to thank you so much for joining us, Steve Hanke. What would you like for our listeners to see more of your work? Any websites or things you want to plug other than Making Money Work in April and your book on the COVID crisis?
A couple of things. One, they can follow me in pretty much real time on Twitter, where I have now 780,000 followers. So I'm rated by Focus Economics as the third most influential economist in the world.
There you go.
And that handle is at Steve_Hanke. Maybe you can put that up on your thing. The second thing, if people want to get on my regular distribution list where I'm distributing articles and things like that, more or less every week, they just write me at my email, hanke@jhu.edu. If you get into the gold, remember at www.goldsentimentreport.com.
No, that's great. And then the final question, I wanted to talk more about tariffs. Do you think the tariffs will work in any way?
No, I'm totally against all tariffs and all sanctions.
Yeah, so we'll have you back on talking about that in the new book.
By the way, I do have a new book that did come out about 3 months ago called Capital Interest and Waiting. There are actually 3 books that we've talked about that I've written in the last couple of years. One is, did lockdowns work? We talked about that. We talked briefly about the book with Security that will come out in April. And then the third one is out now. It's been out for about 3 months. Yeager and Hanke, and it's called Capital Interest and Waiting.
Okay, so we'll have you on next, talk about capital interest and waiting, making money work, and tariffs.
That'd be great.
I want on the next episode to do, there's this theory that's being pushed that the 1800s were some type of glory age because we had tariffs. It's becoming more and more popularized.
Tariffs are not going to do anything good. Let me assure you of that. I actually have an article in National Review of this week that goes over the elements of the thing.
Yeah, I was trained by somebody like you, so I just never thought tariffs were ever a good thing or will ever be a good thing, and it made sense to me. So, I don't know why it doesn't make sense to other people, but
it's very hard to find an economist who's for tariffs. There are a few, but it's way out on the fringe.
Wonderful. Well, thanks so much for coming onto the show, Steve Hanke, and folks, get his books, follow him on Twitter, and we'll hope to have you on again soon.